Hey, everybody, we are almost 2 months into 2024. I cannot believe it. I say that every time we record because time just seems to fly by when you're watching this exciting stock market. Market's at all-time highs. There's all kinds of cool opportunities in there. And we're doing some buying. Tyler Crowe is joining me. He raised a lot of cash at the end of 2023, if I'm remembering correctly about the timing, and now is starting to put some of it to work. So he's going to join me to talk about some of the stocks that we've just bought. Before we dive in, please take a minute, click subscribe to my channel, check out the message you see on your screen. You can get the top 10 stocks to buy right now, and it's the best way to support this work we're doing on YouTube. So I'll start because my stock is a little more well known than Tyler's. Surprise, surprise. Um,
Hmm.
so I added to a position in PayPal recently. I bought shares of PayPal in mid 2023 in response to kind of just the overall market pessimism. The CEO had just left or announced that he was leaving. Growth had really stagnated. Just general bearishness on tech companies. So I opened a very small position last year, and I've added to it a little bit recently, and plan to kind of aggressively build it if it stays at this level. I'm really kind of focusing on deep value right now. And PayPal just looks like a really deep value. I see Tyler smirking at me right now, but we'll get into the pros and cons of PayPal in just a bit. Um,
I was actually just going to comment on deep value because, if you think your PayPal is deep value, wait till we get to mine.
I can't wait. You always educate people on stocks that they've never heard of, so which is actually a really cool feature of the channel. But PayPal's business is not doing as bad as you might think. Yes, member growth has completely stagnated and has actually reversed a little bit. The user base was down by 2% year over year in the fourth quarter, as the active user base, that is. That doesn't count things like accounts that are never used. A lot of people have PayPal accounts that they've used once and don't log into anymore. But despite that, the number of payment transactions grew by 13% year over year, and payment volume grew by 15% year over year. So that's despite a 2% contraction in the user base. And the company had said a little while ago that instead of focusing on all out user growth like they had been doing during the COVID years, the focus would be to better engage the members that use the service the most. And it looks like they're doing a good job of that. Just from, if you can grow your payment volume by 15% while you're losing members, that's pretty impressive in my book. The company's still very profitable, generates about $5 billion of annualized free cash flow. That's on top of $17 billion in cash that's already on its balance sheet. PayPal is a cash machine. Um, Take rates have been going down a little bit, which is a concern for investors. Payment companies really need to differentiate themselves because there's very little pricing power. You can't really compete on price with the other ones or with the other payment processors. So you really need to do something to differentiate yourself. And it looks like new CEO Alex Chris is doing that. And I mentioned PayPal's leadership transition. Alex Chris just took over PayPal at the start of the fourth quarter. So very new CEO. He's already doing a lot when it comes to AI, which I know is the buzzword of the month. But he's completely like revamping the PayPal checkout process, introducing a bunch of new features using AI technology that should help engage users, detect fraud. That's a big part of it, and increase member conversions. I don't know about you, Tyler, but I have given up checking out on a merchant's website because their payment system wasn't working. And PayPal aims to increase conversions by making the payment experience as seamless as possible. So I'm excited to see where they take the company. I'm definitely watching it closely. As long as they can keep executing on their strategy to better engage their members, that's great. I would love to see them make some value adding acquisitions with that money. Right now, they're just spending it all on buybacks, which is kind of nice at the current level. It's really refreshing to see a fintech company with a lot of stock based compensation actually reduce its share count over time. That I feel like too many of them that we talk about don't do that. Um, at the current valuation, PayPal trades for about 12 times free cash flow, and it would be even less than that if you back out the cash position on its balance sheet because it does have net cash. Um, I think of this as a really interesting value play, and it's really rare to find that among an industry leader like PayPal. So I've been building my position a little bit. I'm going to be watching it very closely over the next year or so as the new leadership really, starts to get traction. So, Tyler, I can't wait to hear what stock you're going to talk about. What have you bought already in
Well, what
2024?
before I do that, I do want to mention something that you were talking about with kind of the focus on the active or most like, you know, part. I guess we call them the most active users of PayPal. It made me think of another company. It's an industrial company called Illinois Tool Works. They're a business that they kind of like set the standard on this thing of like 80% of your returns come from 20% of your customers. So focus like your attention on what those 20% want. And that's going to, be a much better offering than trying to satisfy all your customers all the time at the best. It was just a thought. I know because I think it's a little counterintuitive to be like, oh no, we just want to focus on a smaller set of our customers. But there are companies that are wildly successful that run this playbook. And so I wanted to mention that because I think a lot of people hear like, oh, we don't want customers. And it's like, that's a bad idea when it's not. It's been very successful for a lot of people. Um, Now on to mine. So we're going to go down into the weird rabbit holes of oil and gas companies. The one I'm looking at is called, where I recently purchased, it's called Unit Corporation. If anything, this company is not actually the most exciting. And so this is going to be probably like a bad sales pitch, I guess, if you will, for a business. They own both oil and gas production in the Anadarko Basin, which is like Texas, Oklahoma Panhandle, up into Kansas a little bit. It's an okay business. It's not great. They don't do a lot of shale drilling. They actually do conventional wells, lower decline. Doesn't take a lot of capital to kind of maintain production, which is nice. And on top of that, they also own a fleet of contract drill rigs. It's very strange to see an oil and gas company have both of these units. Typically, you're a producer or you're a service company, but they have both. Um, Both of them are mildly profitable. It's a decent business, and it's a business that recently reemerged from bankruptcy in 2020. We in 2020 basically like the oil and gas industry fell to its knees. There was numerous companies went into bank, Chapter 11 restructuring. Unit Corporation was one of them, but they came out with no debt on the balance sheet when they reemerged from bankruptcy. And today they have about a $200 million net cash position, but this is a $390 million company. So more than half of its entire net worth is just cash on the books. And as of right now, it has a free cash flow yield of 36%. So every dollar of revenue that it brings in, 36% of it is free cash flow. It paid out a 25% dividend yield this past year because they pay a special dividend at the end of the year when they have excess cash, which they have a lot of. And it's a policy they plan on going for a long time. Oil and gas industry, prices go up and down, but it doesn't take a lot they don't have to invest a lot in that. And the services business has been very robust. All of its drilling rigs are contracted for 2024 and into 2025 at higher rates than they had in 2023. So all those kind of portend to slightly better results in 2024, where they were just throwing off stupid amount of cash. And so I kind of look at it and say, at 2.8 times free cash flow, I, I might not hold on to this thing forever, but that's a pretty good bargain in terms of deep value.
See, I love when you bring stocks like that. I feel like if I had you on the show and you said, "Well, I brought Microsoft," we would all be disappointed. Uh,
We could. Do you want to just have a recurring series? It's just Tyler's weird stock of the week.
we should. That would actually probably be a good video. One stock you've never heard of with Tyler Crowe. But Tyler, that is an interesting pick. I love the deep value. Like I said, that's kind of my focus right now. And it's really nice to kind of bring some new ones onto the radar. So thanks for that. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.